Welcome to the R Readiness Lens podcast, where we're focused on numbers and driven by results. I'm your host, Sheri Radler, and each week we'll take a closer look at practical ways to get your business ready for what's next. From firm planning for the upcoming quarter to finding the right health insurance for your team. Whether you're a small or mid-sized business owner looking for advisory support or just want to better understand your numbers, you're in the right place. Let's get started. Afternoon. Welcome to episode 10 of our Readiness Lens. And today we're going to talk about decisions. And even more, we're going to talk about decisions by dashboard. And the reason we're going to talk about this is because this becomes one of the most valuable tools in that owner toolbox. When we talk about approaching your business from that readiness lens, and we talk about being from a mindset of preparedness and understanding of where you're trying to go, moving forward with the visualization of the information is that next step. Because truthfully, when you're first starting out as a business owner, we make so many of our decisions just based on information we have at hand. It's our gut. It's how many times the phone rings, the orders on the floor, the bank balance, the instinct of what's going on. And that works when we are the direct relationship with our clients, when that relationship with our team is a one-to-one. But as we start to delegate and as we start to grow and as that space between us and our client and our resources and our field start to put some distance in between, we start having this area where delegation gets messy. Because while we want to step back and delegate and gain the confidence that other people are acting in our stead, we also want to retain that visualization, that information, and that hand on the wheel of knowing what is happening in your organization. So this is where dashboards step in and start solving that problem for us. It allows us to delegate the execution, but maintain our oversight, and most importantly, maybe avoid some of that micromanagement that can create friction in our organization as we are trying to take to the stage of growth. So the first question we're going to talk about is really, what is a dashboard? And I'm going to take it back one, and it's like, what's a KPI? And a KPI is called a key performance indicator. They're also known as a benchmark. But what they are is that, or what they are not, is they're not just a number. This isn't just a piece of data. These are supposed to be guideposts, just like a journey, just like a map, but these are guideposts around the way that are providing directions of where you and your business are going right now. So a true KPI has to have 5 components. It needs to be SMART. So it needs to be specific. You have to be able to know what is the question we are asking. It has to be measurable. How can we break it out? How are we going to determine the answer to our question? Is it actionable? Is this something that once we have the answer, it allows us to make changes? Or is it just information? Is it repeatable or is it relevant? Because both of it has to come into play. There's no point of tracking something that doesn't impact what we're trying to do. And if it's a one-time event, is that really where we want to put our resources in tracking it? Because we're trying to track our business as it's going to grow in time. And the last part of that on the SMART is a time-based. We have to set a time of which we're measuring. So let's kind of take that back, and it's like, so what is a SMART goal as we come back into 2026? You may walk into this year and go, I want to grow my business. That's a goal, but it's not actually a SMART goal. A SMART goal may be, I want to grow my business by 20%. I want to measure it on a monthly cadence, and what is our measurement? The number of quotes we give out, the number of customers we serve, but what comes into the pipeline to help us achieve that goal? Is it actionable? Can we take action to get to that growth? To make 20% growth, what are the actions we can take? Is it relevant? Well, if we want to improve bottom line and wealth and all of that, well, it probably is relevant. And is it a repeatable action that once we define it and develop it, that we can repeat it into our business time over time over time to make it happen again? And is it time-based? What is our 20% of growth time-based? This year, this quarter, or a 12-month rolling? So with those 5 frameworks of turning it into a SMART goal, now you're building a KPI that allows you and your team to start doing some numbers. And the truth is, if it doesn't influence behavior, it's not a KPI. A KPI that doesn't influence behavior is just trivia. I mean, think about our books for last year. You did $1 million in revenue. Great. But that's just a factoid. That $1 million of revenue is trending at 20% growth year over year. Well, now we're starting to have a trend, and now we have a KPI because it's showing us a journey over time of what our revenue has done. So when we're looking at it and bringing that information to our dashboard, what it's trying to do is trying to bring it to a visualization rather than black and white numbers. But our goal is to shorten the time from the time that flag of something is happening on this visualization on a trend to when we're able to bring action to it in our operations. When you're talking about your financial statements in your business, a lot of emphasis is placed on the holy trinity of financial statements. Your balance sheet, your income statement, and your cash flow. All 3 of those are critical measures of your business and what happens in it. But some say stepping back and looking at your dashboards and looking at the trends and that visualization actually can matter more. Because financial statements are showing you a historic representation. Where have I been? What have I done? Where am I at today in a point of time? The KPIs actually are showing you the visualization of trends over time. So they are showing you operational indicators of what is happening in your business. So you are getting a trend visibility, budget versus actual comparisons, forward-looking capacity and cash forecasts, real-time leadership information that you can take to the table and use to make information utilizable within your organization. Financial statements are only telling you what has happened in the past, and they are valuable. There's a million pieces of information we can get out of it. Our percentages of income, our growth year over year, all of this information is exactly valuable. But looking at our KPIs on a weekly or quarterly, monthly cadence gives you a real-time actuality of how some of these decisions are playing. So as we approach KPIs, we talk to business owners and we read a lot of books, we listen to other podcasts, and a lot of emphasis is putting on KPIs and indicators on what is our revenue doing and what is our profit doing. And both of those are critical. It's our top line, it is our bottom line in our business. We, though, coming from our accounting and our little framework of the readiness lens and how we approach it, we come at everything from this holistic business framework. And so we come at it from 5 pillars. Yes, we're going to start with our profit, but we're also going to look at what our cash is doing. Then we're going to look at our team, our growth, and then our risk to our organization. We come at it from all 5 pieces of the pillars of this framework because we believe it is critical to have that overall holistic view. So let's start with the first one, that profitability engine. What is it telling us? Well, that top line is telling us things like operating margin. It is telling us things like our net income, our profit per client. What is our expense ratios? So when you look at that P&L and you go down it, there's a lot of information we can get, but then we start measuring it week over week and actually for a P&L, generally month over month. But what is our trend? What is our payroll cost to revenue this month? What is our fixed cost versus variable cost? What is our burn rate? So when we start looking at those across trends, you start seeing how real life impacts are influencing these. The second place we focus on is cash flow. How is money moving in and out of our business? When we look at our cash bank balance, it is more than what is the cash in the bank. What does that translate to? How many months of our average burn rate? What is our anticipated outflow that we know has already been committed to this month compared to the inflow of cash that we have 100% true confidence of it walking in the door? Understanding where a variance might be between the two and being proactive and be planning ahead. What will we do if that gap remains? Cash flow, we also want to look at forecasts. We want to be planning it ahead. We want to look at our runways. How much money do we have in the bank and how long will it last us? So cash really is the piece of our business that gives us operational and decision freedom. Because think of it. Once, whether you're in your life or your business, once you're no longer in that day-to-day struggle of, I have to make this money to pay these bills, it gives you a lot of freedom. It takes it a step back and you can breathe. You can sit down and have that space to make decisions and not feel like you're always racing because you've got to stay ahead of what's coming due. So getting ahead of cash flow is 100% of the places we're trying to get. The third pillar we then work on is our team. Is it structured properly? Do we have the right people? Do we have enough people? Is everyone understanding of what their role and responsibilities are? When we look at our business, how does that translate to our people? What is our average revenue per employee? What is our average cost per employee? If we have a service-based business, like for example, an insurance agent, and your employee, let's just say your book of business on average is a 10% commission. We've now hired a $50,000 employee. That employee needs to make at minimum $500,000 worth of sales for you before they're even approaching a break-even scenario and bringing any value to your organization on the bottom line. That's not even counting taxes, benefits, and things like that on top of it. But it's understanding that cost of an employee. For example, we're an accounting firm, so we use a lot of softwares and tech. So for every time we bring on an employee, what is the cost to get a new subscription for their name? Every time we bring on a client, what is the cost to bring on a new client onto our tech stack? So knowing what these costs are, bring that information into your mindset and into your table so that when you are approaching your pricing or your conversations, these factoids are rattling around in your head and you know, okay, well, it's going to cost us this much on top of that by the time we get your software set up. It's going to cost this much, but for you to even start paying for yourself. Beyond that kind of cost, let's talk about our team and their capacity utilization. You know, our goal is that we want to keep our team utilized 80% of the time they're with us on direct client work. And so when, because our team sitting around is not of value to us. So understanding where that scales and the time to hire and when to bring someone on, these are where these KPIs can start giving you that kind of guidance. Is our team maxed out? Does our team have capacity? Where are we at to hire that next person? What kind of revenue do we need to have committed to help offset those kind of costs? Those three core parts of the pillars of our readiness lens are the framework of it. But then we want to take it a step back. And now let's talk about our growth and our investment model. Because beyond running our business, everything is about the step back. It's about how does this come and build our life? How does this hit not only our business bottom line, but flow to the life and the lifestyle that we want to live? So as we're growing our business and we're spending money within our business, are we evaluating what is our marketing ROI? That is one of the hardest aspects of your business to measure is marketing ROI. because there's a lot of places we can put money trying to get our name, image, likeness out. But understanding how people find us is so difficult to track. So it's very critical that as people come in, you ask that question. How did you get our name? How did you find us? What is the cost to acquire a client? How long does it take to acquire a client? Is your client pipeline 90 days? So how long does it take from the time you first get contact with a client to the time they're actually on you? Is all your clients repeatable, or are they one and done? And every single day, every single week, you have to get out there and try to find a fresh new client. What is our technology cost? What is the technology ROI? There's a lot of new system software. Older legacy organizations often have a higher struggle right now because you have a lot of systems and things in place. And so you're trying to fill gaps where new softwares coming on are trying to be all-in-one resources. So trying to find that position of when do we change softwares and when do we add onto our tech stack is one of those areas. So understanding your technology ROI can be critical. And then revenue growth versus cost of growth. What is, we can grow our revenue 20%, but does that mean our costs are outpacing that? So not all revenue growth is good growth. Gross margin growth is good growth. And then finally, our final pillar is about risk and controls. Are we structurally protected? Are we building a business within a framework that is not dependent on just myself sitting in the organization in the center of it? Does my team have not only the responsibility and the delegation of their tasks, but we've gifted them the responsibility of the outcome? And then we back them up when they've done that outcome. We turn around and it's like, are we tracking our businesses throughout these KPIs? And it's like, are we setting budgets? And are we setting out targets of this is what we think we are going to do? And more importantly, are we then measuring them on a monthly cadence? And how are we measuring up? And are we having conversations to discuss what those variances are? Because if we anticipate a revenue of this and it fails to come, but we do not realize it and slow our spend, that can turn a business upside down in such a fast time frame that you can get topsy-turvy and your cash flow really struggle to recover, which takes us to the critical part of having a line of credit available to you. So all of these pillars are part of our readiness lens. And if you look at our resource, our attachment that we've given, it talks about all of these. And we're giving you KPIs and some of the percentages where you can measure which ones are critical to you. The 5 pillars become the dashboard structure. You can pick throughout the KPIs and decide which are the ones in your organization that you're trying to measure. What are we trying to achieve? What was our pain point last year? Are we really trying to grow revenue, or are we trying to grow bottom line? Are we trying to control costs, or are we chasing the next client? So understanding where you're trying to accomplish is critical going in, because you can't chase everything. You cannot accomplish everything and at any setting point. So coming out of this, when we talk about all these frameworks and all these dashboards, most everyone has probably seen enough social media and you've read enough books that you've heard them. And when you evaluate them, it is so hard to understand what are the buzzwords and where are they coming from. Because so much of what you're hearing is actually following the same framework. You're measuring it, you're comparing it, and you're taking actionable steps to change the outcome. That's it. Whatever utilization, whatever framework, whatever platform you're using on your KPIs and to measure it, that is exactly what they are all encouraging you to do. Determine our framework, measure it, compare it to what you thought you were going to do, and course correct. So different packages, different frameworks really approach this differently, and we're going to talk through a few here just to give you an idea about it. There's not a right or wrong, and every one of them has a solid position. It just understands how, one, you internalize it and maybe what you're trying to accomplish this year. So coming from the accounting world, one of the most popular ones we hear about, see about, and is out there is Profit First. Mike Michalovich has turned this into an excellent program, and it is all about the allocation discipline. The mindset is the envelope method, and what it is for is the mindset of all this money that we have in our bank account. Let's make sure we silo it and we set some money aside for our team bonuses and our profits and our owner pay and our taxes. They encourage the utilization of multiple bank accounts and transferring money out of your operating account to these side savings accounts to just the out of sight, out of mind principle. They talk about the Parkinson's rule, and it's the toothpaste rule. You know, it's the, hey, when you first start out with that new tube of toothpaste, you're just really good. You got all the toothpaste in the world. But then when we get to the end of the toothpaste, we will squeeze that last little bit out. We tell it to our team, and when we explain it, that if I said, hey guys, I'm going to give you $1,000, go away this weekend and have fun, you would come back and probably tell me you had a grand time. If I said, hey, have $900, go have fun, you would still come back and tell me you had a grand time. And if you never knew that I had taken that $100 and put it aside in your savings account, you wouldn't have missed it. This is the same mindset that goes into having your 401k funds and your retirement funds withheld from your paycheck, out of sight, out of mind, have them paid out on your behalf. So that is the Profit First method. The second scorecard that is very popular right now is the EOS. And this is all about operational excellence and activity. And we're trying to track things on a weekly cadence. So we are setting goals, we are setting targets, and then on a weekly scorecard, we are coming back in and we are measuring it to see how we've done. If we've gone back to our 20% revenue growth example, and if we broke that out, how do we get 20% revenue growth? Well, we must turn around and sell X number more widgets. And in order to sell X number more widgets, we must have this many more clients. So you break it out on steps, and then you continually weekly measure and stay course aligned on what you're trying to do. The purpose of this is 100% about operational discipline and resource excellence. Third one that comes into play, and we talk about it a lot, especially at budget season, and it's called the OKR method. And this talks about what are our objectives and key results of what we are trying to achieve. And this is a great way to come to the table when you're coming into budget season and we're laying out what are our strategic targets. What are we trying to do? What is our objective? That 20% growth. And how do we do it? We increase profitability. What is our key result? 20%. What is our metric that we're going to measure in order to do it? So we break it down into our objectives and key results so we can marry and go back against it. And so this one is all focused on a strategic execution and alignment throughout your team and organization. And of course, let's not forget just Excel. And we write a lot of our dashboards in Excel. We use a software called Fanatical, which is an Excel extension, and it allows us to take any QuickBooks report that we are able to run and keep it as a live dynamic Excel dashboard that allows us to track our revenue and trends over time. And we just really like that because so much as an accountant of what we're trying to measure is just truly that data that comes out of the financial system. So all of these are part of that financial readiness lens. And when we kind of come through it, the idea is that, well, why are dashboards so powerful? And it's a psychological visualization. It's the idea that when you look at black and white data, numbers on a piece of paper, one, not all of us read information like that. But it's dry. I don't care how much of an accountant you may be, it is still very dry. It is numbers, it is decimals. It is nothing that is giving you or presenting you with information. There is nothing on that financial statement that is leading you to a result. But when you turn it into a dashboard and you turn it into this visualization and you can see that, okay, and we write dashboards that color coding, your revenue is trending up and that is a nice little green arrow pointing up. You know that, hey, you have a variance on an expense that is between 10 and 20%. So that cell will highlight in yellow to draw our client's eye to it so we can have a discussion of what happened in the business this period that drove that. If a variance exceeds 20%, that'll flag in red. Because again, we're wanting to draw the eye, and that's just on a trend of, an actual versus budget, but we're wanting to draw our client's eye to this information to engender conversation, to engender action within the field. What caused this? What triggered this? What needs to be done to close the gap? And hey, if that gap can't be closed, if that deal was lost, then what action needs to be taken within the organization to mitigate the impact to us? Dashboards provide answers to our questions, not only visually, but objectively. When they show things over a course of time, whether it is a weekly or monthly period, quarterly, you can see that aspect of how something goes. And it's a very neutral representation of the information, of how it comes in. It allows you to look at things from a percentage, which when you're looking at numbers, your mindset can skew a number. 1,000 to 1,000,000 has a different impact in your brain. But a percentage, that really is a great equalizer on an apples to apples, oranges to oranges evaluation. Our percentage of payroll to revenue is, hopefully, around 30%. And it doesn't really matter how large your organization is. That metric holds really as, a nice core. Are you somewhere between 25 and 40 maybe, but it's a nice round metric that allows you to come in and to see how you're laying out. So the visualization really does change how you perceive the information in your business. We encourage you to look at it because without dashboards, you are reading everything after the fact. You are often firefighting and what bubbles up in your organization and what firefights up into a problem today. Yeah, it bubbled up today, but so often it has been trending that way, and we were just not aware of it till it broke through into your organization's awareness. So when we talk about KPIs, the question often becomes, what do we measure? What do we track? How many do we track? And that answer can be different for everyone. First of all, go back that step we talked about. What is our pain point? What are we trying to resolve? Because that gives us that starting point of which of our 5 pillars we're emphasizing on. I'm going to encourage you want to keep an eye on all 5 of your pillars, but what is our pain point? Then we want to determine what is the solution that we think needs to happen in order to solve our pain point. Now we want to determine how we're going to track our actions. Are we accomplishing that? This is not a many. Number one, what gets measured gets counted. But also you can't track and control 50 different variables. You and your team are probably only going to be able to track and control maybe 5 to 10 action plans. So you really want to bring it down. What are the top 5 things that would move our needle? And then within those top 5 things, which pillars do they impact? Is it our team? Is it our growth? Is it our risk? Is it our profit? Is it our cash? But then what are we going to measure within it? Are we trying to improve our runway? Are we trying to improve our cash reserves? Are we trying to improve our team's capacity utilization? Are we trying to improve our scope and the number of clients we serve? Or are we trying to improve our bottom line? So understanding what you're trying to do is the critical part of it. Because once you have that clarity starts giving you that information, and the clarity starts allowing you to reduce your stress. So, when you have reduced stress, it's because you're gaining confidence in the information you're getting. And when you get done guessing what's coming, because now you know what is happening, it allows you to stop reacting to what's happening because you're now anticipating it. You plan for what's happening. You know what's coming. So dashboards really don't exist just to measure your performance. They're not an action item. This is not a report card. Your report card is your financial statements. Your dashboards and your KPIs are supposed to support your decision making. These are this is your Google Maps. This is how you know whether or not you got a wreck ahead, or if you need to divert or you need to detour. The KPIs are helping you map that journey of where you're trying to go this year. They're going to help you support that decision making for that hiring decision or firing decision, compensation decisions, investment decisions, growth decisions, all of these decisions. But the KPIs can help you map it and let you see ahead of what's coming before you run right into the back end of it. They help reduce your uncertainty. They help you increase your confidence, and overall, they help reduce your stress. So, as we kind of wrap up this podcast, we really encourage you to think through your business, but also think through of what you're trying to accomplish this year. And it's not too late. We're having this conversation right now in March, but whenever you're listening to this is the time to just ponder. What is my stress point? What would the solution be? If this happened in my business, my stress would reduce exponentially. Okay, well, what do we need to get that to change? And let's break that down, and let's break it down so we can then build out the action plan to make it happen. Develop the KPIs so we can track our journey and develop on how we are. We're not just casting a line in the water to see if we catch a fish. We're actively mapping a plan of where we're trying to go. So take a moment, link into the resource that we've attached below, and ask yourself the questions. How are you tracking up? Are you using dashboards? What are you tracking? If you're already using them, share in the comments. Tell the rest of the world what has been helpful for you, and how has tracking KPIs helped shift how you approach your business. Look forward to this one, and look forward to our next conversation. Next time, we're actually going to talk about business killers. What are the things that you may not be aware of that could take your feet out from under you tomorrow? Think about it. We talk about our business, that we're going to sell our business like it's an intentional outcome. But the truth is, less than 3 out of 10 businesses sell on the timeline that the business owner plans. Think of it. Divorce, disease, disability, death. There's a whole lot of D's that can come into play and impact your business overnight. So next time we're going to have a conversation about that conversation. So looking forward to it. Bye. Thanks for joining me on the R Readiness Lens podcast. If you found this episode helpful, connect with me on LinkedIn and follow along on Instagram for more tips and resources. And if you're ready to take your business to the next level, be sure to rate the podcast and subscribe so you never miss an upcoming episode. Until next time, keep your numbers clear and your goals in focus.